Hey everyone, I hope you're doing well today. I believe it's time to start. We will wait a couple of seconds for those who are still joining to join us, but let's start with at least introduction, right? So we can be respectful to your time. And let me start with introducing our topic for today. So we are going to discuss tariff-proofing your supply chain and export roadmap to resilience. Hey again, everyone. And yeah, let's move on. Let me start introducing our speakers because today we have excellent team of supply chain experts from different countries discuss topic which is the most interesting and the most important for us at this moment. Um, so ladies first, I have this privilege. My name is Natalie Axie. I am a PhD candidate. I have honor to be VP of Global Sales and Strategic Partnership at GmbH Streamline. So this is a little bit about me. We can move on to next slide, and I will also start introducing experts for today. Me personally, I'm based right now in Canada. World is changing quickly, so let's see. Maybe next time I will be based in some other country, but so far I'm in Canada. Please meet our first expert, our first supply chain expert, Pablo Gonzalez. And Pablo is based in Mexico. Pablo has more than 25 years of experience in multiple companies, multiple industries. Pablo is expert in S&OP, supply chain, working with different industries. And what is interesting to learn his perspective on what's happening to the world, another crisis, or maybe not crisis. So Pablo, your opinion is very important for us because of, again, years of experience. So Pablo, welcome to this panel.
Thank you, Natalie.
Nice.
Pleasure to be here.
Thank you so much. Our next expert, so we're going from south up, Adam. Adam is supply chain leader and technology enthusiast. He is CEO of Flex Chain Holdings, and he combines advanced data analytic and supply chain experience. He's working in multiple industries with e-commerce, omni-channel businesses, again, supply chain logistics, and also Adam is expert if you're speaking about nearshoring and global trends. Adam is excellent person to communicate with. So Adam, thank you so much for joining us. You're muted, just in case you want to say hello.
Hi, everybody. Great to be here. Really excited. And again, thank you, Natalie, for coordinating this. And yeah, we're excited to dive in with everybody.
Thank you so much, Adam. And our third expert today is Samuel. Welcome. And Samuel is visionary entrepreneur. He is founder of Phoenix consulting firm, and he's helping companies to choose right tools, to do analytics, and to make sure that all decisions are done based on right data. Samuel, welcome, and thank you so much for joining us.
Thank you, Natalie. Very nice being with everyone here.
Thank you so much. And Sam is based in Canada, so almost neighbors right now. Thanks, everyone. Thank you so much again for joining. And let's move on to my favorite question. I did my job. I introduced our speakers. I introduced our topic. And right now it will be nice to learn a little bit about our attendees. So just say hello and where you're located to chat, so we just understand, the geography, whom we are communicating with today. And if you can just write also about your occupation, supply chain, logistics, it also will be nice. Okay, so Wilmington, Egypt, Chile, Germany. Okay, perfect. Spain, London, UK, India, Ontario, Singapore, Canada. Okay, Texas, Toronto, Saudi Arabia. Perfect. US. Okay, Ecuador. USA, Georgia, New York. Great, great, great. Okay, so everyone is interested. Yeah, Texas, Dallas, Boston, Bulgaria, USA again, Alabama. Great. So we have a nice mixture actually here. We have US, we have North America, we have other countries, other continents, so everyone wants to learn again what's happening, and the most important, what to expect next. And to some questions we will have answers, like what's happening, what we do, what can we do, and what will happen next. We will just try to understand our next steps. Thank you so much. Welcome to this panel discussion, and let's move on. So just a little bit about our next steps. First of all, engage with us. We usually have very interactive sessions, so ask your questions during the panel discussion, during this conversation. I will do my best to ask those questions to our experts. We will have polls during the webinar, so we will ask some questions if we want to learn your opinion and want to understand what the situation with you right now. And we will have recording of this session, of course. Just to cover what's going to be our agenda for today, let's move to the next slide. And just right now, we are having introduction. We will cover economic situation overview. On the top level, we will speak about policy and strategy, again on macro level, operational responses and resilience, very much important, sourcing, compliance and risk. We will also discuss leadership and future proofing. What can we do to make our supply chain as strong as possible? And of course, we will have QA, okay? Question and answer at the end. So let's move on. Let's cover economic situation, but before doing that, let me also introduce sponsor of our today's panel discussion. It's a AI-based solution for demand forecasting and inventory planning, Streamline. And according to G2, Streamline is considered grid leader, most implementable solution. We don't have time to implement, to have long implementation. Best relationship. Yeah, this is what we do. We're trying to have best possible relationship with both partners and customers. Again, fastest implementation. Sometimes we implement within a couple of weeks. And #1 supply chain planning solution according to our customers on G2. You can see that Circle K, Badia, Royal Cup, NG, both North American and global brands are our customers, and I'm happy to be here for you and discuss latest trends, actually what's happening to this world right now. Let's move on. And the most important idea, which I want to discuss today, is that tariffs are really changing situation, like changing development situation. What was the growth for development if you're talking about end of 2024 or beginning of 2025, and what's happening right now? And to show you more statistics, more data, let's move to the next slide and let me show you forecast from institutions you all know, World Bank, Organization for Economic Cooperation and Development, and also International Monetary Fund. On this table, you can see original pre-tariff forecast, so how they saw development of world economy at the beginning of 2025. Revised forecast, like how they see it right now. Mostly we are speaking about June report, which is again this month. Only for International Monetary Fund, we are speaking about April report, and we will speak about main key takeaways, what these world and global organizations say to us about the situation. And just pay attention. According to revised forecast, global growth for economy decreased for 0.4%, and right now it is 2.3% comparing to what was before. If we're speaking about Organization for Economic Cooperation and Development, they have similar vision. They say that decreases from 3.1% to 2.9%. And same vision has International Monetary Fund from 3.3% to 2.8%. According to World Bank, right now we have the weakest expected development, global growth in 17 years. Okay, so economy was developing, and right now it is this development is the weakest. Slowdown is expected to be most concentrated in United States, Canada, Mexico, and China. So, guys, congratulations! Of course, we are in the epicenter of what's happening to this world. And 0.5% in 0.5 percentage point drop is because, of course, trade policies and geopolitical uncertainty. So this is a situation. However, let's move on. We know that this volatility is happening regularly. So economy goes up and down, up and down. This is something that is happening every decade. Right now, maybe a little bit more often, but this is again what's happening all the time. And just to remind you dates, let's move to the next one. So first, tariff policies were broadcasted in April, 2nd of April 2025. April 10 announced some pause of escalation, and in July, which is actually 2 weeks from now, we wait for next steps. So how to prepare for those next steps? Actually, let's speak to our expert, okay? And before that, we will just have a very short quiz, very short poll. Was your company impacted by the newly imposed tariff policies? So please, a couple of seconds for your answers. Let's see, let's compare. And after that, we are going to have main part of our panel discussion. Please invest 1 second of your time to satisfy my curiosity. How are things going with your company? I believe you should have results till now. Do we have results already? Can we move on? Okay, so we have 44%. Not yet, but it affected our suppliers. So if it affected your suppliers yesterday, it will help affect you tomorrow or later today. Experienced some adverse effects. Okay. No, there is no one who told that there were some positive effects. Okay, actually it is expected. Great. Thank you so much for answering. Thank you so much for answering. And right now let's move forward to conversation, okay? Let's talk to our experts. And let me start with the first question. First two questions I will ask all of our experts to answer because these are questions related to all countries. So how has the recent tariff situation impacted cross-border trade volumes and supply chain planning? So let's start from Mexico. Pablo, go ahead.
Okay.
The question was, how has the recent tariff situation impacted cross-border trade volumes and supply chain planning?
Sure. Great to be here with all of you. Yeah, the tariff situation is impacting Mexico, particularly because the U.S. tariffs on Chinese goods had redirected manufacturing demand to Mexico, particularly during 2024. And depending on how this tariff situation comes along, we expect to be the same. Again, to redirect the manufacturing demand to Mexico. And this has pushed the country, Mexico, to become the #1 US trading partner in 2024. It is estimated that there is over $800 billion in bilateral trade with the US, particularly because this redirectioning of the manufacturing demand to Mexico. Now, this, of course, is resulting also in investment in Mexico, in foreign investment, particularly to some industries like automotive, electronic, and textiles. And this is focused on there is a surge along the border in the northern states of Mexico, the ones that in the border with the US. The occupancy of industrial parks is over 95%. And this has to do with the supply chain redesign to maintain the US-Mexico-Canada Treaty about compliance and avoid potential duties. And companies are reconfiguring supply chain networks, sourcing more regionally, and redesigning bills of materials to meet tariff-safe origin rules. So there's a lot of activity in the northern border in Mexico when China is becoming affected with the tariffs. And there is a strategic planning mindset shift. Business are treating tariffs not as a short-term risk, but as a permanent planning variable. Uh, this is leading to increased investment in tariff simulation tools, custom strategies, and multi-supplier contracting. And that is what is happening in Mexico.
Thank you so much. Thank you so much, Pablo. Thank you for sharing this perspective. Adam, would you like to add a little bit to the story as well?
For sure. Yeah. So, I mean, I think that the direction right now of global commerce has been toward regionalization of trading and trading blocks. And that's, to Pablo's point about how we're seeing a significant volume of trade that was between the US and China is now migrating to North America, with the US and Mexico, becoming the top trading partner. I think in the current environment, so that's what I see as the macro trend, and that speaks to geopolitical conflicts with China. That speaks to economics and demographic situation in China, changing over time, where labor has become more expensive, and also the workforce size is declining. And that's just making, moving manufacturing there less of a an economic gain than it was 20 or 25 years ago. And, now really it's just the capital intensive process of moving the supply chain out that I think is leaving some businesses waiting to see when the right time is. And as far as the right time goes, right, the current tariff situation is a bit confusing to some businesses, where they're wondering, because tariffs are a big part of that economic picture and changing the economics of when to decide to change your sourcing strategy. And companies want to make such a decision on certainty, on knowing, what the clear trend of things is, right? And so I think just while a lot of businesses have started to make the switch, there's a second category of businesses that know they will want to long term, but are waiting for the right moment, and they want to wait until they have a little bit more certainty of the direction of tariffs.
Thanks, Adam. Certainty is certainly important. Sam, your turn.
So in Canada, it was interesting to see the impact being very real and very immediate, and even pre-tariff. The Bank of Canada came out with the stats of percentages of export to the US pre-April, and we saw an increase above 10% in the first quarter, because exporter saw it coming, and then they wanted to ship the product at the best possible cost. But then in April, the effect was immediate as well. So the exports to the United States dropped by more than 15%. So we see that impact in Canada's businesses has been really, really immediate and quite drastic as well. And for the employment side, same article of the Bank of Canada showed that was actually saying that 2 million Canadian jobs rely on export goods to the United States only. So a lot of export-oriented businesses have stopped or cut their hiring plans a lot because of the US tariff and that uncertainty that Pablo and Adam were talking about. So we're really looking forward to see the next report and how the actual impact on jobs is leading to be.
Thanks, Sam. So no doubt that there is effect, right? Can you speak a little bit more about sectors? So which sectors in your country have been most affected by the tariffs, and how businesses respond? Sam, would you like to continue?
Yeah, so in April, we've seen the export of steel fall by 11%, aluminum 25%, and we're talking all aluminum products. And motor vehicle exports also were down by 25%. So those three industries took a major hit, but just even driving around into the industrial park, we can see a big decline a lot of places being for rent, for lease, a lot of industries have had to move away. So the impact has been big.
Thank you, Sam. Pablo, what about Mexico? Which sectors do you believe had the biggest impact?
Well, in Mexico, there are five key industries that are being impacted by this. And of course, on top of those is the automotive industry, which is a big manufacturing and export industry for Mexico. And the way that automotive is responding is to re-engineer supply chains to comply with the USMCA treaty, expanding the regional content and automation of their facilities. Also, as Sam has mentioned, the steel and aluminum industry is being impacted by these tariffs and is reacting to this volatility by investing in value-added processing and trying to find some export diversification to other countries to maintain the pace of the industry in Mexico. The third one is textiles and apparel, gaining business from the U.S. companies exiting China, and expanding plants also in northern Mexico. Electronics is the fourth one, which is surging with nearshoring demand and assembly shifted from Asia to Mexico, particularly to states that have this kind of industry, such as Baja California and Jalisco in Mexico. And the other one that is being affected is agriculture, which is still sensitive to tariff retaliation. And this is allowing to expand the cold chain and accessing new markets. Again, same thing as steel and aluminum, trying to diversify the markets where we export to.
Thank you so much. Thanks. What about manufacturing in Canada, Sam? How do they overcome actually dealing with parts and materials coming cross borders?
So I think a lot of people have had to pivot, taking that step back and really looking at the whole supply chain, both on the supplier side and on the end user, the customers. Canada has been encouraging a lot of the manufacturers to diversify the trade relationships, even creating new domestic trade routes, which really strengthen the domestic production as well, which helps those industries those manufacturers or those suppliers that lost part of the business to the US and really focusing on how it can stay within. And a lot of manufacturers have actually invested a lot of money on infrastructure. So trying to bring their sites up to par to be able to do more with the team that they have and trying to be more self-sufficient really throughout the whole process.
Thanks for mentioning it. Me personally, I believe that professionalism and efficiency in operations or actually professionalism, it's in our immune system, right? So when we have recession, professionalism will help us actually to overcome it. So thank you so much for mentioning it. Adam, we were already mentioning a little bit about nearshoring, right? But tell us, I know this is your topic, this is something you're passionate about. Tell us more how nearshoring can help businesses reduce tariff exposure. Can businesses do it successfully, and what is your recommendation?
Yes. So I think in terms of nearshoring right now, and it goes back to the earlier point of timing is going to be key for certain businesses. For other businesses, it's not going to be timing dependent, right? So nearshoring ultimately is you're moving your supply chain from a country, usually China, right? But a country that's far and maybe has higher tariffs, right, to a country that's closer and has lower tariffs, right? So the most common right now for American businesses is China to Mexico, right? And that comes with, in the let's say before the tariff skirmishes that we started to see this year, right? You were moving from an environment in China where you were seeing 20% plus of tariffs to Mexico where it was duty free, right, under the USMCA. So, that immediately is a major savings driver. But then there's this second layer, which is by bringing your lead time down by, 3 weeks, right, of not having to ship your product from China, right? There's a lot of benefits in terms of being able to serve your customers and also in terms of needing to carry less product in your inventory pipeline to be able to service your demand. That when you have a longer lead time, you have to carry more, which means committing more working capital, right? So nearshoring in general offers tremendous benefits for business resilience and cost savings. That said, right now, right, for some businesses, right, that are really on the margins, so for some businesses where there's real strategic, push in the United States for long-term, reshoring, or, within US and Mexico for long-term nearshoring, whether that's automotive, whether that's, areas like, pharmaceutical, certain types of high-tech manufacturing, right? There's great opportunity there. And regardless of the tariff situation, you want to think about moving supply chain in that direction because that's a much more sort of highly regulated and capital intensive industry. For other areas, right, if you feel like you're just on the margin and it only makes sense, if a couple of points in either direction on the tariff really changes the financial picture, then I tell businesses that right now, wait until there's some certainty, right? Because I think some businesses are hesitant to make, a big financial play and commit a lot of capital to moving their supply chain. If the tariff situation, either tariffs could drastically come down on China tomorrow, or they could go up on Mexico tomorrow, right? So I think, if your business is very short-term sensitive, I say that, now is the time where you may be most focused on tariffs, but you're also you're operating on uncertain information. You have to tread carefully. Whereas if it factors into long term, pull the trigger now, because you can actually, of course, right? Like when a lot of businesses are held on the sidelines waiting and seeing, this is also when you get the best deals for real estate, the best deals on logistics contracts, things like that. Whereas once everybody's pouring in, then it's going to be more expensive to actually make the move.
It is true. It is true. It's important to understand that there are a lot of risks, but there are a lot of opportunities at this moment. And actually, what I really want us to discuss today, and this is why it's important for us to have a different perspective, right? Opportunities. So what kind of opportunities we can and may find actually here. So let's speak about opportunities, about new strategies which are evolving right now in logistics and supply chain. Warehousing, road change, again, road change, right? So roads are not disappearing, they just change, and custom strategies. So Pablo, would you like to concentrate? And again, it's about finding opportunities. Crises come and go, and where we see crisis, we see opportunities. Share with us your experience, please.
Of course. Yeah, in Mexico, what companies are taking to tariff-proof their supply chains is first of all developing multi-sourcing ability to avoid dependence on China or any single region. And this is an effort that companies are starting to do to cope with uncertainty about what would be the tariffs and so on in the future. The second one is the redesign of the products to meet the USMCA content thresholds and secure the tariff-free access. And that probably means redesign the bill of materials of the products. So the content thresholds are, as I said, secure the tariff-free access. Also, as Adam was mentioning, nearshoring production to Mexico for final assembly and logistics control. So that's a very important key step that is being taken and continue in a continued effort right now for Mexico. The other one is upgrading customs compliance systems. And there are a few of those systems in Mexico already available for companies, such as fiscal warehouses, which allow you to take the product into the country but not paying the tariffs until you actually use it or export. And that has to do with how do you manage inventory. It's not how much inventory do you have, but where do you put it? So this is leading to hybrid inventory strategies to build resilience at the cross-border points. That means that you need to choose how much inventory do you want to have and where do you put it. Uh, and it's also related to how much do you take on raw materials and how much on finished product to have an agile response to the supply chain. Those are the steps that are being taken by the Mexican companies right now.
Mm-hmm. And it should be, of course, based on data, right? So it's not just guess. We are not guessing here. It has to be based on data. So Adam, you already also mentioned data hygiene, right? So any decision in business can be taken only when we have good data and we can analyze. So tell us, please, how are companies using data and real-time visibility to stay agile, okay? And please give us several pieces of advice considering trade volatility.
For sure. Yeah. I mean, and basically, right, the underpinning of being able to make a decision in supply chain is, having the ability to run different scenarios and see the financial impact, right? So let's take Streamline as an example, right? As a planning software, right? By being able to ultimately moving your supply chain in addition to all the different logistics activities you're undertaking, sourcing, manufacturing, there's a lot of work that's happening outside of system. But then what you're essentially, coming away with in the end is a certain cost, a certain lead time, a certain, lead time for production, lead time for shipping, right? And as you're considering some of these different scenarios, working across different suppliers, being able to go into your planning system and run those different, capabilities into it, right? Okay, if I bring my lead time from 40 days down to 10 days, what does that do to the amount of inventory that I need to carry in my supply chain? Or if I change my cost from $14 per unit to $16 per unit, but then I'm also reducing my inventory and I'm also reducing my lead time, what are the impacts? And being able to go into your planning system and model these out lets you, make a decision based on seeing what the overall impact would be to your business, and not just off of instinct or off of reading news headlines, right? Because those could be very finicky, right? And they could change from day to day, but the data doesn't lie.
Mm-hmm. Thank you so much. Thanks. Guys, my next question actually is for Sam. And but we also have particular for Canada questions from our audience from Shahbaz Khan. And I believe that questions from Mr. Shahbaz Khan are even more interesting. So Sam, if you don't mind, let me just read those questions to you right now. So first question in particular for Canada. How are we keeping track of regular tariff changes?
So it falls in line with being informed, right? Of not only being informed, but investing in tariff engineering, trying to understand what is really happening, what are the laws and how they apply, and having that really full scope understanding, that knowledge is really key. We've seen a lot of companies staying informed, being on top, and because of that knowledge piece, they were able to be creative. Uh, we've talked to various clients of ours that through it all, by being really close, having a close relationship with their supplier, having a close relationship to those that are really knowledgeable about the tariff, understanding the full spectrum of the law, the parameters that they're working with, we're able to avoid tariffs to a certain degree and actually be able to keep their costs to a same level. A strategy that we've heard one of our clients actually use is where the manufacturer was setting up a higher setup fee for the manufacturing and a lower cost per item. So overall, the cost per item is what is being has a tariff applied to it, but the setup fee made sure that the supplier still got their fair share of profit. So it was interesting to see how, again, creativity and understanding is really key and has really helped companies still be able to be successful. So make sure you know exactly the rule. You don't, as Adam say, just don't trust headlines because they come and go and they might not be as specific as the actual stipulation of the law. And do your due diligence, stay informed, and for sure there's a lot of ways that companies can be successful by staying on top of tariff engineering.
Thanks, Sam. Second question for Canada. How can we track the tariff costs separately in our ERPs? Are suppliers broker providing full visibility on their invoices?
Sorry, can you repeat that?
Yeah, absolutely. How can we track the tariff costs separately in our ERPs? Is it possible? And are suppliers and brokers providing full visibility on their invoices? So this is same question, a question from Mr. Shanhaz Khan, and again, particularly for Canada. So this is for you.
So it's interesting because I think a lot of challenge might come directly from the ERP you're using. Some ERPs will allow some of those calculation. Some planning tools will allow that. Some others won't. Tools like Streamline have the capabilities to add so many degrees of complexity into the chain onto your processes. So finding the right tool that will help you is key, and making sure that you really understand and you keep a close eye to the cost of the product as they come in, what's top line, bottom line. You want to make sure that you understand that very well. So that's a very good question.
Thank you so much. And question number 3, again, particular for Canada. Any best-in-class classes on forecasting tariff impact, especially for metal, recycled metal industry?
So that's a hard one because, as we know very well, tariff is up in the air. Tariff can change. We don't know what's going to happen tomorrow. So definitely keeping track of it, making sure that you are aware of what's upcoming, I think is key. But really, what to expect specifically for different industries will really depend of the the the, the political landscape at this point.
Thanks. Guys, frankly speaking, I like how our speakers respond to your questions more than mine. So when I ask them questions, they try to be like too much perfect. When you ask questions, they are just, doing their best because they're all experts. So please write more questions, and I will prioritize your question over mine. Okay. So we have one more. How accurate is tariff modeling under different scenarios? So Sam, let's short break for you. So Adam, would you like to cover this one? How accurate is tariff modeling under different scenarios?
So in general, right, the math, sometimes like right now when it comes to tariffs, the challenge is like there's different tariff programs. Oh, there's Section 302, and then there's the fentanyl associated tariff, and then there's the reciprocal tariff, and then so sometimes it's like you're just a little confused as to like, okay, well, what is the final number that I need to be including as an upcharge on my product? But as long as you have that number pinned down, you know which tariff programs are applying and therefore which rates. The math itself is fairly straightforward. I'd say just the things to look out for are if you're importing into one country and then re-exporting to another. So for example, right, if you have product that's going from the US, from Mexico to Canada, right, and it's traversing through the United States, and you have to pay duty at the Mexico-United States border, but then you also pay duty at the US-Canada border, you have to also then know that you can claim a duty drawback on the tariffs that you paid to get into the United States because it was not for consumption in the United States, right? So sometimes, just needing to make sure that you're sort of managing to what that final cost is. But as long as you have the right number to apply, it's fairly straightforward and can be done very accurately.
Thank you so much. Thank you so much for answering this one. There's one more tricky, and let me address it to you, Adam, as well. How to assure the lead time safely stock from China, considering that the lead time from China is not stable.
So how to choose the right amount of safety stock when you're bringing in from China?
Pretty much, yes.
Yeah, so generally there's so I don't want to it's like it gets a little bit technical, but there's the formula for choosing the optimal service level and safety stock. Um it's contingent on two things, right? One is, so what do you want your target service level to be? So do you want it to be at 92%, 95%, 98%, et cetera? And that has an associated like amount of you have to carry. But then there's you can include variability of lead time as part of the standard deviation you use to come up with your safety stock. So not all supply chains do it, but there is basically a way, if you have a highly variable um, lead time out of China, that can be factored in where you're using both the variability of your demand and the variability of your lead time to determine how much safety stock you need to be carrying. It's just a slightly different formula.
Thanks, Adam. And it looks like we have one more question for you because it's from New York. We are a wholesale supplier based out of New York, and with the current tariff change, now and then, what would be the ideal strategy for negotiations and inventory control? Go ahead.
So repeat the last part.
What would be the ideal strategy for negotiations and inventory control? So negotiation with suppliers.
Specifically in the context of tariffs. So in general, right, and this is you know, and this goes into, this needs to be done somewhat carefully and also, you know, favoring a long-term relationship for your suppliers, right? So you know, I used to work in procurement. I definitely you know, recognize that as the market changes, it's important to make sure that your business is protected. So first of all, there are some and again, this needs to be done carefully and it needs to be done by the book. But one thing that I've seen work for companies is that if the supplier is, you know, besides just lowering cost in order to you know, to help you on tariffs, right? There are also ways to shift costs accordingly, right? So for example, right, if right now they're building all of their profit margin into the units that they're selling you, right? And they're upcharging, let's say they're making a, you know, a 30 or 40% margin. But there are, right, if tariffs then go up, then that you're very much exposed to your price going up. Hypothetically, they could take some of that margin out of the per unit and shift it to, you know, let's say some of the overhead that went into them selling you their product, right? So it could be design services, it could be you know, consultation, logistics coordination. Meaning, if right now a company is charging all of your cost in the product itself, that cost is subject to tariff. But if they break up those costs, and then they're still, again, they can't, it's not like they could say, oh yeah, we're just going to give away the product for free and then charge everything as overhead with no tariff. You know, it still has to be done properly and by the book, but talk with the supplier to find out if there are ways that you could take some of that cost out of the product itself and into some of the associated overhead from that supplier. And then in effect, you could be paying less per unit and then therefore paying lower tariffs, but the supplier is not necessarily losing money, you know, if they need it in order to run their business. So, you know, that's definitely a big kind of lever that I see businesses successfully pulling for renegotiation. But again, make sure it's done carefully because, you know, it can land in hot water if there's anything done under the, you know, not by the book.
100% agree. Can't agree more. We have more questions actually, and we will ask them a little bit later. And there is one more thing, guys. After this call, you will get email from us, and you will get emails with links to calendars, everyone, Pablo, Sam, and Adam. So if you would like to have consultation with the expert, just feel free to book consultations. Okay. So let's move on. We have several more questions actually to discuss. And it's about supply chain leaders preparation. And this is actually a question to you, Pablo, right now. How should supply chain leaders prepare for the potential return or escalation of tariffs after July 2025, right? So we don't know what will happen. tariffs may go up or down, right? We don't know. What should be preparations?
Yeah, of course. As Sam and Adam have said before, first thing that leaders need to do is scenario planning for the USMCA renegotiation. Okay, so what could be the possible outcomes of the tariffs that are now being discussed, and what is going to happen after the election that is going to happen in the US uh, in the next months. So it is possible that these tariffs are China or sector specific. So there is a need to make this scenario planning about how things can come up after these renegotiations. Okay. Now the second one is secure alternative sourcing in North America and Latin America or Asia Pacific to reduce exposure. Okay. So that's where the multi-sourcing strategy comes along and so on. Okay. Now there is a very important shift uh, from cost focus to resilience. So companies are focusing now or need to focus now in being more resilience than being cost effective. And that will come by regionalizing the production and the distribution of the products. So that means that you need to have alternatives to to produce or source your product to the different markets, and to leverage other trade agreements as well. In the case of Mexico, for example, Mexico has trade agreements not only with the US and Canada, but also with Europe and some Asian countries. So we can leverage on those agreements to bring materials and also to diversify the export markets. So if our products are not taken in the US and Canada uh, market, we might want to diversify and export to other markets too. Okay. Now the other one is to make sure that we are compliant with whatever treaties we're using. It's either the US, Mexico, and Canada, or Europe and something else. So the audit of compliance is very important to make sure that whatever we produce are compliant with the treaties. Now, having said that, the most important thing that supply chain leaders probably need to do is to align the company to a single strategy. Because if different functions within the company start to do different actions without any coordination, that might not probably result as good as if it is well coordinated. So, for example, if purchasing starts increasing their inventories a lot and production starts thinking about having different production facilities and so on, the thing will be a complete mess. So the most important thing that supply chain leaders have to do is to align the company to single strategies and make those strategies really resilient and agile to respond to different scenarios.
Can't agree more. Absolutely. Like the more difficult time, more consolidation internally with management and team members we need. It's absolutely.
And that alignment might probably come from the S&OP process, which is an excellent way to align the companies to strategies and changes that are coming.
Easy to believe, considering that you have more than 30 years of experience implementing S&OP processes in different companies. So I totally agree that this is actually what is helpful. Thanks, Pablo. We have one more question, actually, Adam, to you. However, I believe that you will not be able to cover it in more details today. So maybe you will need just a consultation with Rick. But let me just at least read that question. Can Adam provide the formula for safety stock that includes demand variability and lead time variability? So I will let you, Adam, handle it, but again, we don't have time for details right now.
Yeah, for sure. Yeah, just Rick, feel free to connect with me on LinkedIn, reach out, and I'd be happy to help get that over to you.
Thanks, Adam. So again, let me remind
Excuse
you.
me, Natalie, is
Go
that a
ahead.
question for the formula for safety stock?
Yes, formula
Okay.
for safety stock, and that includes demand variability and lead time
Yeah,
variability.
just let me say shortly, that is pretty well described in Streamline's documentation about how this is treated, how the safety stocks are calculated considering all these variables. So it would be a good source of information. Go to Streamline's user manual.
Oh, thanks, Pablo. Thank you so much. So I believe that we will send all that information in a follow-up email to you. We still have only about like 5-7 minutes. So to finish this call, guys, what will be one piece of advice to everyone in this time? So Sam, would you like to start?
Yeah, sure. My personal piece of advice would be supply chain teams are good teams. They're proficient at what they do. So, as supply chain leaders, we need to make sure that they have the right tools to do even more of what they do well, right? We think about a lot of companies say, well, our demand planning, supply planning is perfect. We have a good team, we have a good process. That's fantastic. But that team has the knowledge to impact so much more the business. So by having a right tool in it that can allow to pivot to global economic situations. Maybe 2 weeks ago, we only thought tariff would affect, our suppliers, our business, ourselves. Last weekend, everything that happened, things can pivot so quickly. So the supply chain teams are such a strength in the organization. We have to make sure we give them the right tools to do their job right, and that they can really help the business move forward. So, and really that will allow companies to stay positive on their balance sheet and just overall have good outcome and be able to thrive in any circumstances.
Thank you, Sam. Totally agree. Pablo, what would be your piece of advice?
I would say that resilience matter more than low cost at these times. So the design of companies should be done for rapid response to disruptions, because we don't know how these disruptions are going to come. Okay. Now, one of those could be to invest on optionality, having dual suppliers, multiple routes, diversified markets, and how do you manage inventory? And of course, to integrate digital tools for visibility, forecasting, and trade scenario modeling. And Streamline can be a great help to do that. Also to rethink contracts, sourcing and logistics with tariff agility as a core principle. So consider that as a variable. So the contracts should be flexible to allow tariff agility and as a principle. And to shift the mindset from efficiency to strategic adaptability, especially after the USMCA review that we are going to have in 2026.
Thank you so much, Pablo. And before we have a piece of advice from Adam, I want to have one more poll if it's possible. So let's have one more poll. It's about strategies, okay? And what kind of strategy you implement to mitigate external economic effect. So is your company going to pass the cost onto the customer? Mitigating the cost through supply chain initiatives, absorb the cost, pass the cost onto the supplier, reduce headcount, retarget products, and maybe other. So a couple of seconds. Let's check which strategies are the most popular right now. And I am really, really, really curious, especially since right now this small poll, we are doing same poll as Gartner Yeah, I believe it was Gartner. Gartner did it was their database. So it would be interesting actually just to compare your answers to answers which Gartner got. So do we have answers? Okay. Great. It looks like we have very good experts on the call today. So mitigating the costs through supply chain initiatives. So supply chain initiatives, you're trying to be very smart in your next steps, which is great. Thank you so much. And let's just compare with what results Gartner got. Can we have next slide? Yeah. So as you can see, number one, again, mitigate the cost through supply chain initiatives. And we can say that we have same result. I expected to have a little bit worse result, and I'm happy that I wasn't right. Number two, as we can see, we have passed the cost onto the customers. And again, we are also customers, right? So if you don't apply smart supply chain initiatives, you will have to pay for everything. So in any case, it comes to us. So very interesting research from Gartner. And again, you will have recording, you will have this those slides, so you will have chance to learn it in more details. And to finish today's session, let's have last piece of advice from Adam about current situation and successful strategies. So go ahead, Adam, stage is yours.
For sure. Yeah, I mean, I think in general, what I tell companies in this state is historically we think in terms of ROI. We think in terms of how much effort do I have to put in and what is my financial return on that decision. I would add to Pablo's point, I would add resiliency, right? As Pablo's saying, right? That has to, so resiliency as part of the ROI, which means there's really three factors in an uncertain time like now that we have to consider. One is how much effort does a corrective action take? What's the financial return? And also how much does it help our business long term, right? So that could be sourcing, right? And nearshoring and moving fully forward with those initiatives. It could be just trying to figure out ways to renegotiate your costs, or just protect yourself from the tariff in the short term through things like bonded warehouses or tariff reengineering, but things that maybe aren't going to be super labor intensive. Or it could be in something totally, if the only concern, right, if you're uncertain about whether or not nearshoring or resourcing is going to make sense based on your business long term, and you're just thinking about it because it's in the headline or because it's some way to potentially save money on tariffs short term, right? I would say in that case, consider other areas in your supply chain that are more certain and more evergreen, where you're able to uncover that same amount of money, right? So thinking about the business holistically and making the right decision based on where your business is at, whether that's a sourcing decision, whether that's a general supply chain decision, et cetera. That's kind of the best, is respond to the headlines, but don't chase rainbows.
Thanks, Adam. Thank you so much. Very insightful. Thank you, everyone, for joining. This is actually what we prepared for you for today. From my side, I really enjoyed communicating with you. Thank you for being very interactive. Thank you for writing a lot of questions. We did our best to answer most of them. As I already mentioned, you will get email with links to calendars of Pablo, Samuel, and Adam. So feel free to book consultation with them to discuss questions which you have about supply chain and tariff situation currently. Just to inform you, in 1 month, we are going to have one more panel discussion, but more transatlantic. So we are going to discuss situation between US and Canada, again, North America, LATAM, and European side of the world, and MENA as well. So join us in about 1 month from now. We are preparing this panel discussion as well. You're excellent attendees. It was a pleasure working with you, and thank you so much, experts, for joining us. Thank you so much, Pablo. Thank you so much, Samuel. Thank you so much, Adam, for sharing your experience. It was a real pleasure communicating with you today.
Thank you very much to everybody.
Thank you, everybody. It was a pleasure.
Thank you, everyone.
Thank you, and talk to you soon. Thank you.